Welcome back. Bitcoin maximalist Samson Mao is back out again talking about Bitcoin seeing an Omega candle in the market. So yet we have not seen it just yet, but it does appear that crypto may be in a recovery mode and may have already hit the bottom. But we are going to be talking about what else is going on in crypto, what stock you should be selling today. We are going to get back to the Omega candle. We're also going to be talking about what's going on in Trump media sealing the deal with Crypto.com to launch crypto ETFs. We're also going to be hearing from Michael Saylor, Brad Garlinghouse, and much, much more. I got a lot to discuss in this video with you. I think it's really important, especially understanding where we are in the cycle, in the 4-year Bitcoin halving cycle. Don't forget to give this video a free thumbs up. Also hit that subscribe button. That way you never miss a new video. Let's get right into today's topic, starting right here with Trump Media. The company owned by President Trump finalized a deal with Crypto.com to launch crypto ETFs later this year. And so basically, they're letting us know what is going on. As I've explained, the 12 to 18 month time frame after the Bitcoin halving is historically based on the Bitcoin price charts, when we see the most volatility in the Bitcoin price and therefore most of the rest of crypto. And so we are now in the 12 to 18 months after the Bitcoin halving that happened in 2024. We're in that time frame right now. And everything is setting up from a regulatory perspective, from an SEC perspective, from a Federal Reserve perspective, and really from a regulatory clarity perspective. And the fact that Trump media is getting into this ETF game, we're seeing the SEC dropping lawsuits against many crypto companies. This is very bullish. And I don't think that the market has yet priced this in. Trump media, which is a majority owned by the president, finalized this deal basically at the end of April to launch exchange-traded funds tied to crypto assets and securities. The crypto ETF is a financial product that gets traded in the stock market and gives investors exposure to crypto assets without the need for them to directly own the crypto. You own a stock effectively, and the stock has a piece of the crypto in it. This is what we see with the other crypto products like Bitcoin ETFs and the Grayscale products as well. And this brings us to the World Liberty Financial Holdings as well. So we know the president is getting into crypto ETFs, right? And maybe not directly, but indirectly, they're getting involved with it. We know that they own World Liberty Finance, which is a crypto company that's backed by the Trump family, and they aim to strengthen the US dollar's global status in the decentralized finance space. And as we've been covering all year, they already have $105 million in this fund, World Liberty Finance. You can see this on Arkham Intelligence or on Drops tab, and you can see what they are actually holding. And this is another indicator of where the markets may be going, because here's the deal, guys. We have the Nancy Pelosi tracker, and World Liberty Finance is effectively the Trump family tracker when it comes to crypto holdings. And so you can see that they own at least at the time I'm making this video, and this does change, so it's important to kind of keep this in mind. But say blockchain, they own about just under $1 million worth. They own $10 million of Tron. This should be an indicator of where Tron is probably going to be projected to go. I would imagine we're going to see Tron listed in US exchanges sooner than later. Because this is a very large percentage of their portfolio. It's 9.5% of the portfolio is in Tron. Nick, you would be like, why are they investing in Tron? I don't know the answer to that question, but I'm sure we will find out. I'm sure there's going to be some kind of partnership or technological breakthrough or something like that. But anyway, they own $41 million worth of Ethereum. And again, these are at today's prices. Athena, $5.15 million, $500,000 in Ondo, almost $17 million in wrapped Bitcoin. So basically Bitcoin, $5 million in Move, $2 million in AVAX, $5 million in Mantle, 11 in Tether, and 31 million in USDC. So you can see a pretty wide range of different cryptos, new and legacy, but large quantities. I mean, $105 million is their entire portfolio. Maybe 15 million is in crypto itself. And so this is something that we should be looking at as a piece of our investment thesis and strategy and research, so that we can understand where things are going. And following not just the Trump ETFs, but all of the ETFs, the Bitcoin ETFs, the Grayscale Bitwise and other crypto funds as well. And meanwhile, we are now finding out that crypto firms gave $18 million to Trump's inauguration. Ripple gave almost 5 million, and it was the second biggest overall. Now, one of the reasons I pulled this up is not necessarily that crypto firms gave money, because it wasn't just crypto firms that gave money, but I want you guys to remember that Sam Bankman and the FTX estate, I guess you could say, they were the second largest donors to the Democrats during the previous presidential campaign, right, in 2020. They were the second largest donor. They gave something like $70 million dollars or something like that. And nobody was upset when that was understood, right? I mean, the second largest donor to get that previous president elected, and now everybody's up in arms that crypto firms are giving money to Trump, and that Trump and his family are getting involved in crypto and crypto related products. It's like, number one, what's the difference? Number two, we are in a capitalistic free market society. Why should they not be involved? And why would they not try to make their businesses successful? That does not make sense. And I think that this is just a difference between a business mindset and a non-business mindset, right? A business mindset, a business owner mindset, and a worker mindset. These are different mindsets. It's not saying one is right and one is wrong. It's just different mindsets, right? Most people that I talk to that just work kind of regular jobs, like quote unquote regular jobs, they have a very different mindset when it comes to how businesses should be run, how employees should be treated than a business owner. And it's not saying one is right over one being wrong. They just both have their own differing opinions on the situation. But at the end of the day, like if you're running a business, you're running a business. And I do think that Trump does understand kind of where the dollar is. I mean, this is why Doge is going in and kind of cutting the fat to at least try to save some money, because we are on an unsustainable path. The Federal Reserve has said that, the Treasury has said that, economists say that. I mean, it's pretty obvious where the debt is going, and that we need the conversion to a new currency, which is going to be digital dollars, which is already being rolled out. Tether is going to be part of the digital dollar ecosystem. USDC will be part of it is basically the US dollar, digital dollar ecosystem right now. And we'll probably see some more. But yeah, Ripple is in there. Ripple knows that they have been. I believe that they've been treated very unfairly compared to other type of businesses. The courts agreed because they were not. They deemed XRP not a security, and basically everything got dismissed. And this was before the new administration and new SEC chair people took over. And so, yeah, they gave money. And do you guys think that that's going to help Ripple along the way? Absolutely, it will. But we're going to be getting to Ripple in just a few minutes, because there is other Ripple and XRP news. But I want to get to that in just a minute, because I want to stay on this kind of ETF conversation. So one of the things that we've been talking about on this channel is the ETF outflows in February and March and even in April of 2025. We saw massive quantities of Bitcoin being exiting these ETFs, and therefore being sold on the open market, and therefore bringing the price of Bitcoin down. I also do believe that some of the Bitcoin ETF outflows was to create the liquidity and also push the price down after MicroStrategy purchased billions and billions and billions and billions of dollars in December, January, February, and March. So that's exactly what we saw. But as I've explained, there will be a turning point where these Bitcoin ETFs start buying back into the market, and where they were the liquidity for MicroStrategy purchasing. There's no other major players that we know of that are going to be the liquidity providers when these Bitcoin ETFs start inflowing. So then what happens if there's a supply shock? Boom, price goes up. So let's stick right there, because this is bringing us to the Omega candle that we were talking about at the beginning of the video that Samson Mao believes is on its way. And so daily inflows into Bitcoin ETFs reached $381 million the end of April, their biggest single day inflows since January. And again, if we look at the price of Bitcoin from today, where we are in basically the end of April, early May. Just pull up the 1 year chart here. What you can see happen is, we basically started coming down in January, right? That was the last inflows in January, and then what happened to the price of Bitcoin? Started to come down, right? This was also one of the last major purchases that MicroStrategy made because we started to see outflows from the Bitcoin ETFs. You can actually go to Farside Investors' website, and you can see that, by the way, this last column shows the total for the day. So like right here on January 21, there was $802 million flowing in to the Bitcoin ETFs, meaning literally they bought $802 million worth of Bitcoin that day for these ETFs. And you can see in the beginning, as throughout January, we saw massive inflows, and then boom, January 27th, half a billion dollars flowing out. That was it. And then after that, we basically saw a little bit of volatility, but as you guys can see on this last column, as I scroll down, which is bringing us closer to today, a lot of red. So we saw billions February 25th, $1.1 billion was sold out of ETFs. And this has been going on for months now. But now we're seeing inflows. And so what does this mean? Well, the 11 Bitcoin tracking funds saw a joint net inflow of $381 million on April 21, largely carried by ARK Invest, which bought $116 million. And you can see the in and outflows on this chart right here. But let's just kind of scroll down a little bit because we only so far have had a few days of inflows, but it does appear, based on the trend, that we are starting to get more inflowing than we are seeing outflowing. This could be for many different reasons. I'm not going to try to figure out or guess why we're seeing the outflows or inflows because I don't know. All I know is I'm looking for trends. And when I'm starting to see, bigger numbers popping up here, right? It went from $1.5 million of inflow to $76 million of inflow to 170 of outflow. So it erased those previous 2 days. The next day, 100 million inflow. So basically, in 1 week, there was inflow and outflow, but it was a net neutral, right? It was zero basically. But then the 21st, $381 million of inflow. So I'm going to be monitoring this because I understand that when we start to see these massive inflows, and if it continues for a week or 2 weeks or 3 weeks, in my view, Bitcoin's going much higher. Because again, where is the liquidity coming from, right? We asked the same question when MicroStrategy was buying Bitcoin. Where was their liquidity coming from? Like, how were they buying this much and the price was going down? Well, now we know, looking back and analyzing the data, the reason that it was going down in price was because as MicroStrategy was buying, all these ETFs were selling. So they were the liquidity and they were dampering, I guess you could say, the volatility that would have been in the market if there was no Bitcoin available for MicroStrategy to purchase. But again, this goes back to the point that Wall Street is in control. Michael Saylor is no longer in control of Bitcoin and no longer essentially in control of where the price of Bitcoin goes. Wall Street is in control. Because even if Michael Saylor says, fine, I'm going to screw the Bitcoin ETF issuers, I'm going to sell some of the Bitcoin. If he sells, the market's going to crater because everybody's going to get worried. Why is MicroStrategy selling? Is there going to be more? Like, what is going on here? So they're locked in. They cannot sell. And so they're only on one side, right? It's either hold or buy. And so if they buy, obviously they want the price to go up. But if they're buying and the ETFs are selling to keep the price where Wall Street wants it, MicroStrategy is screwed. So I don't think that MicroStrategy has the upper hand anymore. I actually think that ETF issuers have the upper hand. But again, they can decide that they want the market to go higher. And this is where Samson Mao's belief that we are going to see an Omega candle popping up. So let's listen to what he says here. And then I'm going to explain to you what the Omega candle is, because I think that there is some validity to this argument about an Omega candle coming and waiting for this Omega candle. Because one Omega candle it can make your decade in terms of profit, right? It can literally make your decade. Anyway, so let's listen to what Samson Mouse says about the Omega candle and how we could potentially reach this Omega candle. And if you're not sure who he is, he basically owns this company, Jane
As more
or Jan
countries
3,
look
and
towards Bitcoin as
he is a Bitcoin maximalist. So let's listen in. And by the way, if you're up to this point in the video and you haven't already done so, give the video a free thumbs up. Appreciate all the support and all the free thumbs ups. Let's listen in.
as more countries look towards Bitcoin as the solution to their problems, which it is, and the kind of normalization of Bitcoin strategies, especially from the US. Like even before the SBR, you could look to the ETFs and say the largest asset manager on the planet has launched a Bitcoin ETF. Why wouldn't a
BlackRock.
poor country allocate some of their capital, some of their reserves to Bitcoin in some way? Just as a prudent asset management strategy, which in theory, every central bank of every country should be doing if that is their mandate to stabilize prices and ensure economic stability. But that is not enough, actually. But the SBR, I think, is very different because it is direct
SBR is Strategic Bitcoin Reserve.
government acquisition. And I think once that really kicks into high gear, the executive order now just says don't sell and acquire in budget neutral strategies. But when they do actually have legislation that says go and buy, or if Howard Lutnick puts together one of those budget neutral strategies and starts executing acquisition, then I think we'll start to see a rush. And that rush is likely going to be something that we haven't ever seen before. It is going to trigger that rampage of capital into Bitcoin. And that's when you see Omega candles, and that's when you see even more volatility. We could go up 300,000 and then down 200,000 in a couple days.
And I love what he says because he really puts into perspective where this volatility actually can come from and where it can go. So if you're wondering, well, Cryptoviser, what is the Omega candle? Well, according to Grok, and this is what Samson Mao posted, so he agrees with this. It's let's see if we can pull up the whole thing. It says an Omega candle is a term primarily in the context of crypto trading, especially Bitcoin, to describe an exceptionally large and rapid upward price movement within a short period of time, typically a single day. It's depicted as a massive green candlestick on a price chart, symbolizing significant bullish surge. The term has been popularized by Bitcoin advocate Samson Mao, who uses it to predict extraordinary price increases that could reshape Bitcoin's market behavior. In his framework, an Omega candle represents a daily price jump of $100,000 in one day or more, distinguishing it from smaller but still notable movements like God candles, which are typically defined as $10,000 daily moves. The concept suggests a dramatic event driven by intense market dynamics such as overwhelming demand outstripping supply. Boom, that's the Bitcoin ETFs can come in. Governments buying Bitcoin, that can come in. Potentially triggered by factors like gamma squeeze on related stocks, right? So short squeezes on MicroStrategy, a massive ETF buying, or other macroeconomic catalysts. So that's the Omega candle, guys. $100,000 price move in one day. And a lot of people outside of crypto don't think that this is possible, right? People in crypto believe this is possible. Where do I stand on the Omega candle? I don't think that it's impossible. I don't think that it's as likely because as we go back to what we were just talking about, Wall Street controls the market, okay? And so I would not be surprised at all if they have conditional limit orders in which don't hit the order books unless the condition is met. So for instance, they say if Bitcoin goes to $125,000, trigger this limit sell. And then the limit order would go on the books for, let's say, $130,000. So if it goes to $120,000, boom, the order gets placed for $130,000 or whatever the numbers are. And then that pushes the price back down and can create some buffering to the upside. Effectively, we used to have circuit breakers. I've done videos on my channel. I don't even know if they're still up, but let's see. Basically, in the stock market, there are circuit breakers, which basically, if a stock goes up or down like 15% in a very short period of time, sorry, in a very short period of time, then basically the the exchange will stop trading to kind of let everything take a breather. We had this in crypto. It was called the crypto exchanges. I may have to unprivate those videos. I think those videos are privated, but essentially, I did full videos on what these circuit breakers are in crypto. Historically, they've been crypto exchanges that would basically just shut down during high periods of volatility, right? I mean, every previous cycle before now, we have seen Coinbase, Binance, Kraken, all these major exchanges just literally go down at the same time when we see massive volatility, mostly to the downside. And these, I believe, are circuit breakers. These exchanges are like going down to slow the drain, because otherwise, all the leverage and all the liquidations in the market will just keep triggering more liquidations. And essentially, you can go to zero very rapidly. I mean, if a lot of people forget back in 2020, the price of oil went into the negative, where you could have been literally paid to buy oil, which is like, what? So that was because the circuit breakers, I guess, didn't trigger, or they didn't have triggering in those kind of markets. So this could happen in crypto. Like, we could see a $100,000 move to the upside. But is it likely? That's the next question. Is it likely? Well, here's the deal. Again, I don't think that we're going to see the Omega candle unless, again, there's some massive announcement that governments are going to be buying. But then I believe that a lot of that is going to be reversed very rapidly. So, and that would probably be the top of the market, and that would be it. And we would be basically just down from there. And so we have to be very careful about wanting an Omega candle, because if an Omega candle does come, it may end the bull market, and it may end any potential for seeking profits. So we have to keep our eyes on this kind of volatility and understand this. But Samson really believes that we are going to see an Omega candle very soon, and he believes it's going to happen in this cycle. But as there is still areas to make money, there's some stocks or some cryptos that we have to dump, right? We have to sell them. We have to get them out of our portfolio, because they're going to do nothing besides keep going down. And even if your stock or crypto is down 90%, sometimes not having it in your portfolio anymore is just better, right? You don't have to look at it every day and say, "Oh shit, I'm down 95% on this stock and this crypto. I hope it goes back up," because most likely it's never going back up. Well, recently, that decision was made for my personal portfolio. As you guys know, last year, we were talking about Griffin Mining, or under ticker name GRIP. This stock seemed very promising to me as an investor, because Griffin Mining, the executives came from other Bitcoin mining companies that are doing extremely well and have massive growth. And to me, it seemed like Griffin Mining was on that same path. But I don't know, just a combination of market dynamics and just general macroeconomic conditions. Because remember, the Federal Reserve still hasn't lowered rates. So businesses are struggling. Businesses are struggling to borrow. Businesses are struggling to acquire other companies if they're not huge mega companies. And that's why we see a lot of acquisitions. Big companies are acquiring small companies because they just cannot make it. And now, I'm not saying this is the case with Griffin Mining, but as you guys can see on the 1 year chart, Griffin from last year at the peak, $1.64, and we're now down to 17 cents, which is a 90% drop. Well, recently they posted this as a preliminary statement to the SEC. And this is when I was like, yeah, it's over for Griffin. It is over. And again, these are just my opinions based on what we're about to go over. So this says, "Dear stockholder, a special meeting of stockholders for Griffin Mining is scheduled for whatever." Again, this is the preliminary statement, so it's not final, so they don't have the dates yet. But basically, they're going to be voting on these proposals. One is to approve and adopt an amendment to the company's certificate of incorporation to increase the total number of shares from 150 million to 500 million. Okay, so this is red flag number one. Okay. Now, other companies do this as well. They raise the total number of shares. That way, they can sell some onto the market when their stock is doing well. That way, they can raise money that way. It's not that big of a concern, I would say, but combined with everything else we're about to go over, you know it's bad. It's really, really bad for Griffin. I mean, this is a 3x, right, in total number of shares. So effectively, the value of the stock would go down by 67% from where it is today. That's a problem. The second amendment that they're looking to go through with is to approve and adopt an amendment to effect a reverse stock split of the issues and outstanding shares of the common stock at a specific ratio. Again, they're not naming which ratio, but they're giving a range, ranging from 1 to for 2 or all the way up to 1 to 40 at any time prior to the 1 year anniversary date of this special meeting. So effectively, what they're saying is they can authorize a reverse stock split. A stock split makes the number of shares that you own less. A reverse stock split makes the number of shares that you have more. So effectively, 1 to for 2 all the way up to 1 to 40. So if they give you 1 to 40, they're devaluing your stock by 40, right? Because they're creating that many more shares. Typically, they're doing this typically they do a split, which makes the price go higher. This is where they're authorizing a reverse split, which would make the price of each individual share go lower into the pennies, effectively, if they did 1 to 40. Or I guess that's what 1 for 2 or 1 for 40. Yeah, that's or one stock for 40. I don't know. It, this and the increase of shares to me is like already is like, whoa, this is a problem. And so I'm no longer in the stock, and I plan not to be in the stock any longer because until they reverse. And granted, this could be a buying opportunity because if Griffin Mining gets acquired by another company or they continue to expand, that could be great. But the fact that they're having to do all of this and dilute all the shareholders to raise money means that they're not getting the money from other things, and they're probably not profitable from a you know a total business perspective and with the growth perspective in mind. And so I do think that they will do fine over the longer term, or they'll be acquired by another company. But I think they're just too new. I don't think that they've created enough, and therefore the share. And that's not me saying that, guys. That's the share price saying that because the price is down 90% over the last year. And so the shareholders are saying, and the market is saying that Griffin was way overvalued last year. And, we can't win them all. And that's really part of what this video is about, right? The millionaires and billionaires, like they take losses. I just saw a video or a post about Warren Buffett saying that if you can't stomach 50% drops in the market, you probably shouldn't be in the market because this is what the volatility will look like during certain periods. But the bear market feeling is much worse than the bull market feeling because bull market feeling, everybody's happy, everybody's making money, everything's doing well. There's a lot of hope for the future. And in the bear market, you think that it's all over and you're never going to recover in these spots. But sometimes this is where it is important. We've talked about this many different times throughout the time that I've had this channel. Dumping portions of your portfolio and just reanalyzing and restructuring the way that your portfolio looks sometimes can be good. And that sometimes that means removing the losers out of there so that you don't have to constantly see it and hope that it's going to rise by 1,000% so that you can recoup your losses, right? Because that's highly unlikely that's going to happen versus putting it in other assets and then just regrowing. Remember, some traders, they only make one good trade every 5 years, 6 years. I think Raoul Pal said that. He said some of the best traders that he knows, they take massive, massive losses. This is how a lot of gamblers make money too, right? People are not willing to lose, but if you know that you have an edge, right, by playing poker or whatever, you can go out and make $5 million on one game and then lose $2 million for the rest of the year, but you're still up $3 million, right? So that's a different way to look at it as well. Anyway, moving right along, Michael Saylor is now explaining how Bitcoin is demonetizing real estate. And this is one of the things that we've talked about on this channel is that, in my personal opinion, I don't think that real estate is an investment everybody should be in, right? Because even though you have to live in a place, so people look at it like, well, why would I rent? I don't have equity in anything. You literally, like, there's so many hidden costs in owning real estate. And when you talk about Bitcoin, there's no overhead, there's no property taxes, there's no utility costs, there's no maintenance. I mean, there's some security that you have to get involved in and potentially pay for, but it's nothing compared to a home, right? And the risk of having the home, you need insurance, you need upkeep. And so, yeah, it may not be the most ideal asset, especially if over the course of 20 years, let's say, the value of the home goes up by 3x. Over the course of 20 years, that's 5 cycles for Bitcoin. Think about it. If Bitcoin just doubles every cycle times 5, that's 10x. So with no overhead, no costs, you can get a 10x versus overhead and costs, you can get what did I say, 4x, 5x? It doesn't make sense. And so let's listen to what Michael Saylor says here. And don't forget to give the video a free thumbs up.
I know wealthy people, they own 16 estates on the Eastern Shore, and they live in 2 of them. Like, why do they buy them? They land banking. What does that mean? Well, the guy makes a lot of money every year, and he doesn't want to put it in a savings account, so he goes and he just buys a cool piece of property, and he buys another one. Well, okay, it sounds good, but here's the problem. The guy buys up the beautiful pieces of property, and so you can't afford it.
Right.
And if the rich guy wasn't buying up all the beautiful houses, they would cost half as much. And you could live in a beautiful house. So here's what happens. Some rich dude has 27 houses that are empty. You don't have a beautiful house. You have a family. Your kids, your dog could use the beautiful house. The rich dude doesn't even want the house. He just wants a long-term capital preservation strategy. Right? And so that's a perverse incentive and a distorted economy. That's broken. That's broken money. That's because the rich dude is using an estate on the Eastern Shore of Maryland as a piggy bank.
Yep.
Huh? But the estate doesn't get renovated. The house is falling down. There's a beautiful pool on the water, and you could have a great family picnic there every Sunday, but it's not going to happen because the rich dude has 16 other houses. He just bought that house because he thought it was a good investment. Okay, that's wrong. I know.
And listen, guys, I would agree. I would agree with what Michael Saylor is saying here. Rich people are not just buying properties because they want to maintain it. They're doing it because they see it as an investable asset that will go up over the course of time. And this is, most people, they've been told, oh no, buying a house is the number one way to invest. And for some people, maybe it is, but I really don't think that it's superior to what Bitcoin is. And again, this is where everything leads back to Bitcoin. Everything leads back to Bitcoin. It is disrupting so many different businesses, so many different ways of thinking, so many different investment theses that people literally don't know what to do with themselves. You see somebody like Peter Schiff, who understands Bitcoin's benefits. His son is a Bitcoin maximalist, right? But he's so deep in gold. His whole life has been surrounded by gold as the premier asset, that he can't switch over. I think some of it is like mentally that he can't just make that change over to Bitcoin. And then the other part is his whole gold business that he built would effectively go to zero, right? If the founder is leaving and saying, no, Bitcoin is superior, your business has no necessarily credibility with customers anymore. And so, yeah, I think that a lot of what we see with it is just preservation. Like people don't want to admit that real estate is not a good investment because then their real estate investments go to zero and they can't get what they want for it. But a lot of people have already changed. I mean, we saw a lot of people selling their real estate at the end of 2021 into 2022 because they wanted to offload it because they understood, like, no, now I can get a premium for my real estate and not have to deal with all the overhead and all the expenses and all of this. And where did they put their money? Well, what do we see happen with crypto? Bitcoin, it went higher. And people put in a lot of lending products, right? Because they said, well, I can lend my money into, BlockFi or whatever and make more than I would owning a home. Anyway, moving right along, Brad Garlinghouse from Ripple has shot down 2025 IPO rumors, but analysts are still bullish on XRP. I don't know why. I mean, because the XRP army is so averse to the fact that Ripple tells them they will continue to sell XRP onto the open market until they have none left, effectively. And the XRP army loves it. They're like, oh no, it's totally fine. This is not going to affect the price of XRP. It's like, no, it already has, right? XRP may have done a 5x already this year, but the reason that it did a 5x was because it was repricing in the last 4 years, because Ripple did not, or XRP did not really perform in the 2020-2021 cycle, mostly due to the SEC lawsuit and a lot of exchanges delisting, and the conversation wasn't just there. And so I think this is one of the over-levered bets. I think that a lot of people are going to get wrecked. We may go much higher in XRP, but just like Solana, guys, everything leads back to Bitcoin. I mean, literally everything leads back to Bitcoin. If I sell a coin in profit, I think, okay, what coin should I put this in next? And it all leads back to Bitcoin, right? I took my profits, go back to Bitcoin. Because over the long term, I don't know how the rest of these coins are going to do. In the short term, they may do excellent. In the medium term, they may do amazing. And even in the long term, they may work out. But we don't know that. I do believe my entire life, Bitcoin and Ethereum definitely will be around, will be the top coins, and will have the most usage from a blockchain technology perspective. The rest of these coins, they're all a crapshoot, all of them. I mean, even Bitcoin and Ethereum are, but the fact that you have Wall Street and major companies and all this integration, I think it's less likely that we're going to see these two not succeed. At least in the next 10, 20 years, I think they're going to succeed. And there will be other chains that come along that succeed as well. But there's millions and millions of coins in some of these blockchains, and some have great technology and some are way behind and some have no technology. So a lot of these are not going to make it. We really have to look for which coins are being used, which coins are being integrated from a DeFi perspective, from a institutional Wall Street perspective, like who's interested in what coins. And this is going to determine the winners and the losers over the longer term, but definitely in this cycle. Hopefully you guys enjoyed today's video. Don't forget to give this video a free thumbs up. Also hit that subscribe button. That way you never miss a new video. I'll see you guys when I see you. Crypto on.